Hello, fellow traders. 'Tis I, the Rumpled One. The topic: horizontal lines, placement and practice. I hope you don't think I'm beating a dead horse, because horizontal lines are definitely still alive and swell, as I like to say. A lot of people having problems with the simplicity. Other people, as soon as they see it, they go, wow, I wish I would have heard about this years ago. In either case, you can still use horizontal lines. Let's move on. Once again, we've got one of my favorite horizontal line indicators, the sweet spot's gold, that I modified. And it's spaced every 10 pips. Now, we've talked about price action before. And there's only a couple things that can happen that when it comes to price action. Either price breaks out of the high, low, or both of the previous candle, or it doesn't. That's it. That's price action. So you can see here on this particular candle, price broke out. So let's see. If we want to do a horizontal line right here, and then we come back and we do a horizontal line right there. That's it. It's that simple. Now, of course, at this time of day, that's only a 2-pip range, but the thing is, price action's the same on all time frames. We can move over to the 1 hour chart, and let's see. We can take this horizontal line and we can move it there. We can take the other horizontal line and we can move it there. And you can see once again, either price is going to break out or it's not. That's the price action. That's placement of your horizontal lines. And that's one way to do it. Now another way, let's see here. Let me do something real quick. I wrote a delete all objects indicator. Cleans up the trash really well. And you can find that in the freebies. So now we got rid of those horizontal lines. In fact, we can also, if I remember correctly, we can turn off the sweet spots. So now we can just use our own. So we're looking at H1 horizontal line placement. Well, there's another indicator that I put out this year. I call it Einstein. You may have seen that video. This is price when I first added the indicator. So if we just set down to at our trading terminal, everything will be relative to that line. Price is either going to go up or down. And then these two dashed lines, that's our trigger. We'll let price oscillate between the lines. But if it goes this way, we'll go long. If it goes that way, we'll go short. Because what does it matter what price did down here? We're not trading back. That's history. We're trading from this point forward. That's the beauty of the Einstein indicator. It's relative from when you sit down. So if we look over here, we can see D1 is green, but H1 is red. So if we only want to trade when H1 and D1 agree, then we'll go long right here. It's that simple. It's not difficult. I hope hope you understand that. And you don't even need the indicator. You can just draw your own line. As soon as you sit down at your chart, put the line on the chart and trade accordingly. From when you start, is price up or down? Then maybe at the end of the hour, you might want to move that line and start fresh. Or maybe you want to keep it the same. That's up to you. But as you can see, price is just pretty much sitting there right now. It's about 3 o'clock in the afternoon, New York time. Not much happening. So, horizontal line placement. There's another way you can do it too. We'll just get rid of the Einstein indicator. And let's clear our chart once again. Now we can let the objects come back. We could say, well, let's look at those price turns that you talk about so much. Well, we could put a price turn line right there. And we could put a price turn line right here. Or we could also say, we could put a price turn line right here because price just turned. So it turned, it turned. So what's price going to do? It's either, if it's turning, you can go short here. But if it reverses, you could go long there, which looks, once again, an awful lot like a breakout. Price action. You see, traders, it's not difficult. It's really simple. We're not using anything fancy, no higher math. We're just placing lines at places where candle color turned. So, once again, everything is relative. From this point, price turned. So for all practical purposes, if it's below this line, it's down. So you either want to trade away from the line going this way or trade away from the line going that way. You usually don't want to trade towards a line. You want to trade away from a line, with the exception of daily highs and lows where you would trade away from it. There's usually an exception to almost every rule in trading. Some rules are made to be bent and others broken, and some are made to never be broken, or you'll pay. So you see, fellow traders, very simple chart, very simple concept. Using the horizontal lines, it's not difficult. You can put these lines on the chart and then you can see what price is doing. Or you might not even need the lines and you can see what price is doing. So I hope that helps. I'd love to hear your comments. Let me know if this does help. And if you have any questions, feel free to post them either on YouTube or on the other trading forums that you know I post to. I don't really like getting questions in email because then not as many people as possible can benefit from the exchange. But I know some people are a little shy about posting things in public, so I understand. And I usually answer all the emails. Might take me a while on some, but I don't think anybody can complain that I don't answer their emails. So, fellow traders, as always, it's not what you trade, it's how you trade it. The Rumpled One, signing out.